Well, let's start our conversation today again as we stay with the 4 finance bills that President Bola Tinubu has signed into law, aiming to restructure Nigeria's tax system. A lot of conversation around this and boost revenue generation. The fiscal reform laws are expected to simplify revenue collection, reduce tax burdens on low-income earners and small businesses, and increase government revenue. The 4 fiscal reforms law, Nigerian Tax Act, consolidates tax laws into a single code, eliminating over 50 small overlapping taxes to enhance ease of doing business. Tax Administration Act establishes uniform rules for tax collection across federal, states, and local governments. Nigerian Revenue Act replaces the Federal Inland Revenue Service with the Nigerian Revenue Service, a more autonomous and performance-driven national revenue agency. Joint Revenue Tax Board Act improves coordination between levels of government and creates a tax ombudsman and tax appeal tribunal to resolve disputes. Impact on Nigerians, low-income earners, individuals earnings up to 1 million naira, $650 per year, will no longer pay income tax, thanks to a 200,000 naira, that's about $130 rent relief. Well, let's join Mr. Olumide Esan. He is my guest. He's a partner and energy and chemicals leader with Deloitte. He joins me via Zoom for this conversation. Good afternoon, Mr. Esan. It's good to have you on the program.
Good afternoon, Tolu, and it's a pleasure to be here this afternoon. Good afternoon, viewers.
Yes, it's been a while.
Really.
Well, the Act comprehensively overhauls Nigerian tax landscape and brings a lot of change into the entire system. Can you give us an overview of your understanding of this?
Yes, thanks. Thanks, Tolu. I'm super excited that finally we have the Act passed. As you may be aware, I worked alongside as a committee member, so I know it's been a long work. Thanks to to tenacity of the chairman of the committee, seeing this through. Yeah, I mean, if you look at the acts in general, you could look at them from 4 or 6 pillars. One is before we different for Act itself, but overall, this reform, that is the bit about harmonization. So, from having over 12 different acts, now we have 4. So this, under each of those acts, they had the administrative bit and the taxing bit. Now we've had that streamlined, and so we just have one Nigerian Tax Act that contains all the acts. So, and then we have, Nigerian Tax Administration Act that contains all the administration issues, with taxation. And you have the Joint Revenue Board and Nigerian Revenue Service. So from a streamlining and harmonization point of view, it's a big positive. That's one of the things we need to celebrate here. The other is competitiveness. We now have a tax system that is competitive within Nigeria, putting everybody, giving everybody, a level playing field to compete on, and even externally competitive when we look at our effective tax rate as a nation. Number 3 is globalization. Many people are aware of the Globe Rules, sponsored by OECD, which speaks to the concept of, effective rate and minimum tax. Our NTA has incorporated the details in a Nigerian way, to ensure that there is that 15% minimum tax that now applies to companies with.
All right, Mr. So please give me a moment. We just have live pictures from Port Harcourt. We'll continue our conversation where the NDDC is the continuous celebration of the 25 years of NDDC. Yes, these are live pictures from Port Harcourt there, and we'll be joining for live coverage from there. But Business Nigeria obviously continues on all our platforms as we continue the conversation on the other side. So let's go ahead, Mr. Esan. Sorry about that. Go ahead.
Okay. All right. So I was speaking to the third theme. I've spoken about harmonization, how this act now harmonized. I talked about the competitiveness. I was just speaking to the globalization and how we have applied the global rules in our own local environment. The fourth thing is digitalization. You see a lot more about e-invoicing, and even FRA spend a lot of money on technology to ensure that the tax environment is less cumbersome than what it used to be. Number 5 is about transparency. There's a lot more requirement for disclosures. Even if you are doing aggressive tax planning, now you need to disclose. And number 6 is a structural shift. Truly now we have what looks like a progressive tax system in Nigeria, which protects the weak, than we've ever had before. So, when you look at these 6 themes, you would agree that it's a remarkable shift from where Nigeria used to be. Now, if I may speak briefly on each of the 4 acts and what to note there, starting from the Joint Revenue Board. Before now, we had the Joint Tax Board, and some states felt it was more of a federal government thing. And so, some of them do not recognize the authority of the Joint Tax Board. So you see people going directly to the state high court to plead a case rather than, first of all, administratively going through the Joint Tax Board. Now, with the Joint Revenue Board, there is a federation-like dispute resolution mechanism. The Tax Appeals Tribunal, which is established as part of this Joint Revenue Board. There is acceptance at both the federal and the subnational level of the importance of having a consistent dispute resolution mechanism in Nigeria. So, that's a big win as far as I'm aware for joint revenue. Now, on the NRS, which basically replaced the to Federal Inland Revenue Service Establishment Act, you see it provides a lot more governance and independence for the FRS. You also see that we have the tax ombuds now introduced. Before now, if you have tax issues, tax controversies, and you cannot afford to employ a tax advisor because of fees, you literally are at the mercy of the FRS. But now with the tax ombuds office, you get support which is paid for by government. There's also an element of digitalization in NRS as we have it now. So overall, we have a modernized tax administration, which is now going to be managed by the NRS. Now, moving to the 2 heavier acts. One is the Nigerian Tax Administration Act, which, to be honest, it's a remarkable shift from what we used to have before. If only you just think about things like audits, management, or refund management. So, for example, in the old law, if you have a VAT refund, you first get audited before you get the refund, and that could take forever. Now, under this new act, the way the refund process works is you're refunded first, and then you're audited after. So you can see a dramatic shift from, just focus on collecting tax, which was before, now to focus on fostering economic development, and the consequence of which will increase tax yield. Also, now you can seek for advance ruling on particular transactions from the FRS, and you get the ruling which is binding on the FRS. Now, moving on and talking about the meat of it all, which is the Nigerian Tax Act. For the first time, we have a truly progressive tax that protects the poor. Now, what do I mean by protects the poor? You mentioned earlier, some exemptions that are now, applicable to people who are earning certain income. Yeah, of a truth, if you're earning the first 800,000 is exempted from income tax for individuals, right? And then you still have this allowance of, 500,000 or 20% of your rent, provided you provide some information which FRS may request for, which basically means that the low-income earners are protected under this new act. Now, as you know, even though you want to modernize the tax system, you also need to ensure that the state doesn't go bankrupt. So what that means is you now need to think about income redistribution or wealth redistribution, whichever one you decide to use. So if you're taking less from the poor, it means you must be taking more from the rich. Otherwise, you won't have a balanced budget. This is more important when you consider that a lot of the states in Nigeria are civil service states. And so when you look at that, the bulk of people are low-income earners. Now, if you now exempt these people from income tax, that shortfall must come from somewhere. So you see that increasingly now, there's a 25% marginal rate now for personal income tax. So if you're earning, decently, if you're earning 50 million above, it will be taxed at 25%. So it's truly progressive in every sense of it. And I'm glad that we finally are here as a country. There are also other innovations. For example, before you need to, for every expenditure to get deductions, must be wholly, exclusively, necessarily incurred and necessarily incurred. We call it the rent test: wholly, reasonably, exclusively, and necessarily incurred. Now we only have the WE test: wholly and exclusively. This is simplifying the tax system and making it more predictable. So now you can tell if your expenses will meet that threshold and whether they will be deductible for tax or not. We have the economic development incentives now, which is going to replace the whole pioneer status, because it's obvious that the pioneer status wasn't achieving the intended objectives. But with the economic development incentives, what has happened is priority sectors have been identified. Okay, our creatives, these sectors are now, there are, depending on how capital intensive these sectors are, there's a threshold of the amount of capital that you need to invest to qualify for that incentive. And where the incentive work is different from the past. Now, this incentive is going to work by way of tax credit of 5% of your qualifying capital expenditure. And more importantly, to ensure that it is not abused, even as a sector, as a priority sector, there is a sunset date. There are some sectors that, based on this, our government believes in 15 years, the sector should be matured, not needing subsidy from government to operate. There are some sectors that is 20 years, so it's just so modernized to ensure that we can be proud of our tax system as a nation. So that's just, we can spend a week to talk about these different 4 acts, but that's just a very view summary of what these acts are bringing to the table.
I must say, in-depth analysis from you there, picking it one after the other. I want to talk about the personal income tax regime. The NTA changes the income brackets and applicable rates for each bracket. I think you touched on it too, 800,000 per annum and all that. So I think is that part of the reason why the likes of Mr. Oyedele is saying that this is pro-poor. I think that this tax law is obviously pro-poor. How do we justify that, really? More of that.
Yes, indeed. So looking at the acts in general, there are so many reasons to reach that conclusion that it is pro-poor. One, what you've said, the first 800,000 is not taxable, and even if you have rent, that amount could increase to 1.3 million if you have rent of 500,000 that you can provide, documents to support and whatever information that is required by FRA. So that frees up, monies in the hands of struggling Nigerians, right? If you also look at the value-added tax, you will also see that most of the things that are consumed by the masses, largely in terms of food, education, Medicare, are also now zero rated. Okay, there's a difference between being zero rated and being exempt. Before, we have some of those things as exempt, which means the provider of the service cannot charge VAT on it, but also cannot recover input VAT. But by zero rating them, it means the consumer or the service, the poor Nigerians we are referring to here, will not have to pay VAT. But at the same time, the party that's providing their service will be able to recover any input VAT it has suffered in providing those services. Number 3, these Nigerians we're talking about, also a lot of them are employed by small and medium-sized entities, micro and small to a large extent. What you will see also is that this act has given a further break to these companies from corporate income tax. So before we used to have 25 million as a threshold, now it's 50 million, meaning these small businesses that employ 5, 6, 10 Nigerians, and to the extent that their turnover is within that threshold, they don't have to bother about corporate income tax. So looking at it whether from a corporate income tax point of view, Tolu, or we're looking at it from a value-added tax point of view, or we are looking at it from a personal income tax point of view, or even from protection in the event of tax disputes. Now they can approach the tax ombudsman to support them in dispute with our government. So anyhow you look at this thing, it is now pro-poor than ever before.
Brilliant stuff. I think I want to agree with you. But something I would ask you, and you should expect this from me, implementing this act, how feasible it is, understanding that it is expected to take effect from the 1st of January 2026. It's a pre-election year. And I've had some analysts tell me that government needs to really watch before they could implement this to the latter. You know what we faced with the PIA, which myself and you, obviously you came on this show so many times to analyze it. What do you think of appropriately or implementing this tax laws to the latter?
Thanks, Tolu. So a number of things. One, this tax law will leverage a lot more on technology than ever before. From an FRS point of view, now NRS, they have been making significant investments in the past, and this is not coming. There's nothing coming in here as a surprise to them. So from an administration point of view, I think they're pretty much going to be ready. Now, if we look at the Nigerian tax policy, it provides for 90 days advance notice, right? But in view of the wholesale changes that has happened as part of this law change, I think the government is being magnanimous actually by making it, 6 months, because what the policy provides for is 90 days. I think there is enough time to implement for companies to look at their businesses and realign and restructure their businesses. In terms of, is that the will on the part of the government to implement this? The winner here, at least in the short to medium term, are the taxpayers, right? VAT rate was not increased, right? Company income tax rate was not increased. So if you're looking at it, what exactly could make it difficult for government to implement it from a political perspective? I'm not a politician, so I don't know what politicians, how they think through this. But purely from an economic point of view, the Nigerians are not losing as a result of implementing this act. But if your question was around readiness to implement, I think both the companies, the taxpayers, the individuals, as well as the various revenue services have enough time to adjust their businesses and be ready for implementation.
All right. Let's shift our focus to the oil and gas industry, where there seems to be a significant shift with regards to investments and all of that. You know what I'm talking about. And many will talk about the executive orders and the bold steps by President Bola Tinubu also with regards to that segment of the economy. What are you learning with regards to all of this?
Yes, Tolu, I double hat, so, I'm a tax partner, but I'm also tax person, so I love both topics. So if you look at the changes we are seeing today, it just speaks to the intentionality on the part of the government to address the long-running issues in the industry. What I mean long-running is talking about issues around cost. Nigeria has not been a competitive environment to invest in because of the cost premium issue, which some people think was as high as 40%, meaning if you need to invest $1 in another jurisdiction, you need $1.40 to achieve the same outcome in Nigeria. So how we see government addressing this as part of the executive order that was released earlier last year in April, including that executive order 40, there were considerations as to what needed to happen with the local content, what needed to happen with managing contracting through NNPC and APIMS and all that. So that is cutting the red tapes and shortening contractual cycle from 24 months to like 6 months. So that was to address the issue of cost premium. That was one. The other one is the issue of the cost efficiency incentive order that was issued some few weeks back. which tend to reward companies that meet the cost benchmark as set by NUPRC. If you recall, under the PIA, there's a section 8 that mandates NUPRC to set cost benchmarks for the industry. So the way we work is if NUPRC believes the terrain where you're operating requires $20 per barrel, and you finish the year with $10 per barrel, then you've saved $10. So the tax effect of that, government has used a unified rate of 30% to say, well, that means you've saved government, 30% of $10, which is $3. Government has assumed that everybody will be taxed at 30%, even though that's not exactly the case. But for the purpose of the order, 30% is the benchmark. So you've saved, because otherwise the cost you incur, you get tax relief for it from the government. Okay. So by incurring less, you are costing government less. So government is saying, look, this $3, this $10 you have saved by your unit operating cost being $10 as against 20, I want to reward you. And so to reward you, government says, you've saved $10, that means you've saved me $3. I will share it with you. So you get a credit of $1.50, and I'll keep $1.50. So that's the essence of the cost efficiency incentive order that was issued by the government. So a combination of this incentive and also intentionality to bring down this cost by cutting down red tapes is one reason why the cost premium is going to go down. And so that means cost of doing business in the upstream in Nigeria will go down. The second one is insecurity. You've seen that government has been more deliberate in addressing restivity in the Delta and also, calming down the nerves there. And so addressing overall, security situations around, the East and West Delta. So you're looking at insecurity going down. The third one is on funding. When NNPC used to be a corporation, it used to hold a lot of cash calls. It was always struggling to pay cash calls and all that. And if there is no fund, there can be capital projects, particularly for the joint venture companies. The new NNPC, which is NNPCL, is being run like any other oil company, and it's meeting its cash calls. It's paying its cash call, and so there is more capacity for the operator in alignment with the JV partners to spend more capital expenditure to produce more. So you can see that from the funding, from security, and also from the cost better fields by Total Energies and JV partners. It is an attempt to improve the economics. Now, is this enough? Now, people will argue that it's not enough, but clearly it's a better position than where we were years ago. So if government Nigeria is really serious at improving the economics of projects in the country, addressing insecurity, addressing costs, addressing red tapes, then, we will naturally attract investment from around the world. And that's why you mentioned earlier increase in rig counts. Yeah, because there's a lot of money to still be made. Remember the large reserves we have, over 206 trillion cubic feet of gas, right now, and we can actually increase those reserves. So there's a lot more we can do as a nation to improve on our fortune, particularly in the oil and gas industry. But we are making progress, and I think that's the thing to just celebrate. Yeah.
I'm excited that we're making progress. But before I let you go, I'm still concerned about the implementation of the PIA. Are we in tune with the details of the act, and what will be your outlook for the entire industry?
Yeah, so the PIA, it's meant to be a journey. Remember, for decades, we had, as a nation, been trying to pass the bill. We could not pass it. So at the end, I guess what was passed was a work in progress, right? There are some things already celebrating in the PIA. One of which is the integration. We all know that this in the oil industry, if all you do is just produce and sell, you're not retaining value in the country. But now we're seeing a lot more participants in the midstream in Nigeria and in the downstream, people adding value to what is being produced in the upstream. We have now, I could use the word plethora of refineries in Nigeria. So there's still very limited large ones like Dangote, NNPC, or the one BUA is doing in Akwa Ibom, but we have a lot of refineries. And what this would do is to add value to what is being produced in the country. We have gas-based industries as well. We're seeing a significant shift from what we used to have before, where government used to subsidize industry. Because of the PIA under Section 205, which now makes it mandatory for for the industry to operate on a market cost-reflective tariff basis, you see that there is no subsidy again. On PMS, we pay what the market dictates, and that is why it fluctuates. Sometimes it goes up, it goes down, and that's the way it is in other developed economies as well. It goes down because hydrocarbon is an international baby, so we don't control the price as a nation. We've seen developments in our gas economy in Nigeria, and though we are not there, but there's some positive progress. We've seen the CNG wave. So we cannot deny that there has been, positive developments as a result of the PIA. But what we also cannot deny is that we are not there yet. There's still a long way to go. And so I'm hoping that in the near future, government will revisit the PIA and make some additional improvements, listen to stakeholders and work things through with them.
I must thank you, Mr. Olumide Esan. Interesting conversation with you, as always, and educating to partner energy and chemicals leader at Deloitte. Thank you so much. Do enjoy the rest of your day and have a productive one.
Thank you. My pleasure to you.
All right.